In just a few short days, silver prices have skyrocketed over $6 per ounce, surpassing $56, faster than gold. What's driving the silver market into this unprecedented surge? From global economic volatility and trading disruptions to unusual production signals, everything is creating a seismic shock that even experts find astonishing. Right now, you'll discover why silver prices are exploding so dramatically. Silver is entering a major growth cycle that could last for years, raising expectations for a powerful breakout phase for this precious metal. March 2026 silver futures have climbed to $57 per ounce, an impressive number compared to just over $30 per ounce at the same time last year. Remarkably, this rise isn't a sudden spike, but a steady, rhythmic increase. This stability significantly reduces the risk of sharp declines, while indicating that large amounts of capital are quietly flowing into silver, with strong confidence in its long-term prospects. The silver market is currently showing extremely positive momentum, with most investors in the green, holding profitable positions. Those aiming to take profits at $34 and $48 have mostly sold during previous rallies. This sharply reduces short-term selling pressure. Investors who remain are strong hands, long-term believers less affected by short-term market swings. With supply concentrated in the hands of these steadfast holders, silver prices are supported by a solid base, enabling future rallies to be more sustainable. Technical analysis signals silver is poised for even stronger gains. Recently, silver broke an ascending triangle, a highly reliable bullish pattern. According to expert Jesse Colombo, this breakout opens a technical target towards $72 per ounce, much sooner than many expected. On shorter time frames, a small cup and handle pattern has also emerged, another classic bullish signal preceding major breakouts. The simultaneous appearance of multiple bullish patterns shows buying pressure dominating and reinforces silver's long-term uptrend. This convergence of technical signals strengthens confidence that silver's rise is not temporary but could mark a sustained growth cycle, attracting more large capital flows in the coming period. Global demand for silver is surging faster than ever, while mine supply cannot keep up with accelerating consumption. Silver plays a crucial role in modern technology and industry, from energy-reflective windows that save electricity to next-generation solid-state batteries for electric vehicles, a breakthrough for the EV sector, and a wide range of electronics, sensors, chips, and other tech applications. In fact, everything needs silver to some extent, from renewable energy and industrial production to smart consumer devices. However, mining output hasn't kept pace, creating persistent supply shortages. This growing imbalance is driving silver prices upward, paving the way for sustainable growth in the coming years. Looking at real value measures such as CPI and M2 money supply, silver's upside potential is far greater than current prices suggest. Adjusted for the 2007 CPI, silver today should be worth over $27 per ounce, meaning the market undervalues it. Considering M2 expansion, the gap is even larger. Silver should theoretically reach $668 per ounce, far beyond conventional expectations. Even using the shadow stats measure of real inflation, reflecting a steeper decline in purchasing power than official data, silver could reach $1,700 per ounce. These figures aren't random predictions, but comparisons of silver against eroded currency value over time. This shows silver remains undervalued, with substantial room for strong future gains. Historically, almost no fiat currency system lasts forever. All eventually collapse due to devaluation and prolonged inflation. The author emphasizes that as fiat money is continuously printed and loses purchasing power, finite assets like silver become safe havens. In this context, silver's price could rise to any level allowed by the market.
Historically, almost no fiat currency system lasts forever. All eventually collapse due to devaluation and prolonged inflation. The author emphasizes that as fiat money is continuously printed and loses purchasing power, finite assets like silver become safe havens. In this context, silver's price could rise to any level allowed by the market. China's silver market is sending critical signals of material shortages. At the Shanghai Futures Exchange, physical silver available for delivery is nearly exhausted, forcing short positions to cover immediately. Large short covering trades have occurred at prices 9 to 10% higher, indicating strong physical buying pressure. This situation raises the possibility of a short squeeze, as traders betting on falling silver must buy back at higher prices, pushing prices even higher. This is a fundamental factor supporting silver's global rally. The U.S. silver market, especially CME COMEX, is also under pressure from physical shortages. In one day, 12.5 million ounces, 8.3% of registered silver, left the vaults, depleting the amount of physical silver available for futures contracts. Registered silver is the real metal backing future settlements, and when it drops sharply, the paper market becomes fragile. A simple analogy. Imagine Walmart's warehouse has only 10,000 boxes of Twinkies, but the system shows 1 million. When real demand spikes, shortages occur immediately. Similarly, as physical silver declines at CME, futures contracts lack adequate backing, raising the risk of short squeezes or price volatility. This highlights strong physical buying overtaking the paper market, pushing U.S. silver prices higher. Renowned investor Robert Kiyosaki recently warned of a global financial bubble and emphasized silver's importance during volatile periods. When Japan raised interest rates, the Japan carry trade, borrowing at low rates for international investment, collapsed, creating shocks across global markets. Kiyosaki recommends turning to safe, long-term growth assets like gold, silver, Bitcoin, and Ethereum. He highlights that silver is not just a wealth preservation tool, but also a way to get rich when the world grows poorer, leveraging the precious metal's strength amid fiat devaluation and financial risk. Holding silver at the right time can transform global risk into profit opportunities, while protecting asset value against traditional monetary system collapse. History shows silver can surge far beyond expectations when viewed against key economic benchmarks. In 1980, the Dow Jones average stood at 850 points, while silver was $50 per ounce, a Dow-silver ratio of 17:1. Applying this ratio to today's Dow of 47,716 points, silver would theoretically need to reach $2,800 per ounce to maintain the historical ratio. Another example relates to housing. In 1980, a typical home cost $55,000. Today, the average is $450,000. Adjusted for purchasing power, silver would need to reach around $409 per ounce. These numbers highlight silver's undervaluation compared to historical metrics and its significant upside potential amid fiat currency decline and global asset volatility. Silver is not just a precious metal, but a measure of real asset value over time. Interest in silver is surging to unprecedented levels. A recent live stream reached the channel's highest ever viewership, showing the public is awakening to the true potential and value of this precious metal. Record audience numbers reflect growing recognition that silver is not just an investment asset, but also a tool to protect wealth in a volatile global market. The gold-silver ratio has just broken a 14-year support level, a highly significant signal for the precious metals market. This indicates silver is preparing to outperform gold, with the potential for stronger price gains ahead. As the ratio continues to decline, silver has the opportunity to break out, offering substantial profit potential for investors following the gold and silver markets.